isn't it? Just we discussed regarding the dividend, calculation of corporate dividend tax, and I explained this problem number 9. Each account come under where head, and I asked you all to prepare the format of statement of profit and loss and the balance sheet. You all are ready with the format, I think, isn't it? In the previous class only, I asked you all to prepare the format of statement of profit and loss and the balance sheet. You all are ready with the format? Directly, can we do the notes to accounts? Yes or no? Please respond.
Yes,
Yes,
ma'am.
ma'am.
Okay, now we'll discuss the problem. Following is the trial balance of Anand Company Limited. Prepare profit and loss statement for the year ended 31st March 2015 and balance sheet as on that date after making the necessary adjustments. So what are the accounts given? So each account will discuss under which head it comes. Okay. So I want you all to tell opening stock of raw materials comes under which head? Please be fast. Opening stock of raw materials.
Cost of goods sold, ma'am.
Uh, Cost of material consumed. Cost of material consumed, where you're going to take opening stock plus purchases minus closing stock, where you get cost of material consumed. Then wages. Yes, employee benefit expenses. Buildings.
Fixed asset.
Under fixed assets, tangible assets. Under fixed assets, we have classification, isn't it? Tangible, intangible, capital work in progress, and intangible assets, development of intangible assets. So we have under fixed assets, again, we have 4 categories. Clear? So buildings comes under tangible assets. Carriage, other expenses. Sundry debtors under trade receivables. Plant and machinery under fixed assets, that is tangible assets. Current investments under current assets, first point, current investments. Advertisement, other expenses. Bad debts, other expenses. Interest on debentures, finance cost, but it is given for half year. So the remaining half year, the remaining 6 months is outstanding. Furniture, tangible asset. General expenses, other expenses. Salaries, employee benefit expenses. Insurance, other expenses. Cash in hand, cash and cash equivalent. I think you all knew, I'm telling under which head it comes. You all knew that particular main head comes under statement of profit or loss or balance sheet, isn't it? You all knew that, isn't it? Then comes share capital under shareholders funds. First point, share capital. 10% debentures, which comes under long-term borrowings. Non-current liabilities, long-term borrowings. Sales under revenue from operations. Creditors, trade payable. Bank overdraft, short-term borrowings. Income from investments under other income. Return outwards to be deducted from purchases. Then closing stock already it will be adjusted to your cost of material consumed. And the next one is next effect, where you're going to show in balance sheet under inventories. Then depreciation on plant and machinery by 10% and furniture by 15%. So the depreciation to be calculated on plant and machinery and furniture, and that depreciation part which will be shown under statement of profit and loss under the heading depreciation and amortization. And the next effect which will be deducted in the balance sheet under fixed assets, tangible assets, where you're going to show plant and machinery and furniture. From plant and machinery and furniture, the depreciation amount will be deducted. Then make a provision for doubtful debts at 5%. So this provision for doubtful debts to be calculated on sundry datas. What are your sundry datas? Sundry datas are 25,000 on 25,000 at the rate of 5% to be calculated, and this is provision for bad and doubtful debts. What is the effect? This provision for doubtful debts to be shown under statement of profit and loss under the heading other expenses. And next effect in the balance sheet on the asset side, current assets under trade receivables, where we are going to show sundry datas. From sundry datas, deduct provision for doubtful debts. Next, provision for taxation. Provision for taxation to be deducted, that is from profit in the statement of profit and loss itself, where we are going to show after statement, that is profit before tax minus tax. So there you are going to take this 5,800, and the next effect where you are going to show in the balance sheet under current liabilities subheading is short-term provisions. Then directors declare dividend at the rate of 15%. So always the dividends to be calculated on the paid up capital. So what is your paid up capital? 1 lakh. On 1 lakh at the rate of 15% is your dividends. And thus dividends to be deducted under reserves and surplus, where we are going to transfer profit after tax from the statement of profit and loss account. Is it clear? From statement of profit and loss, profit after tax will be transferred to reserves and surplus. So under the heading reserves and surplus, where you have profit after tax, from that way you're going to deduct the dividends. And the next effect where you're going to show it is proposed dividends. So where you're going to show in the balance sheet itself under the heading current liabilities, subheading short-term provisions, proposed dividends, where we are going to show. Clear? Then transfer 10,000 to general reserve. So this 10,000 transfer to general reserve, from where you're going to transfer? From the profits. So already profit after tax is shown under general reserve. So from profit after tax, deduct this 10,000, and the next effect is this 10,000 to be added to your general reserve under reserves and surplus. So addition and deduction will be done under the heading reserves and surplus itself. What we are going to do, from profit after tax we are going to deduct, and to general reserve we are going to add. Then corporate dividend tax at the rate of 15% plus 12% surcharge plus 3% education cess. So the company, whenever the company is paying the dividends to the shareholders, the dividends on gross dividends, the company has to pay the tax which is known as dividend distribution tax to the government as per the rate. So the basic rate is 15%. So whatever dividends we are paying on the total dividends, we have to calculate 15% plus on that 12% plus on the total amount 3%. That is the tax where you're going to pay to the government. So ignore grossing up of dividends. Usually the corporate dividend tax to be calculated on gross dividends. So whatever dividends we are paying to the shareholders, actually it is net dividends. So as what we are supposed to do whenever you're calculating the corporate dividend tax, first you have to gross up the dividends and then calculate the corporate dividend tax. But in the problem, he mentioned ignore grossing up of dividends. So here we are not having in our syllabus, you need not gross up the dividends. So for any problem, this is the information where they are going to give ignore grossing up of dividends. So when they say ignore, so whatever dividends you are paying, we are going to assume that it is dividends, gross dividends. And on that way, we are going to calculate the corporate dividend tax at the rate of 15% plus 12% plus 3%. In the previous class where we did short problems on corporate dividend tax, I think that you all are well versed with calculation of corporate dividend tax. Clear? Now, this is the format where you have of statement of profit and loss. So under A bit, I want any one student to tell fast under A bit what we take. Or shall I tell the names? Yes.
Revenue from operation, other revenue, and total revenue.
Yes. Under A bit, where we are going to show revenue operations, other income, and that revenue from
Total.
other income, where you get the total income, that is A bit. Then under B bit, what we take first one is what? Under B bit?
Expenses.
Very good. Under B bit, where you are going to show the expenses. So under expenses, first one is what?
Other cost of material consumed.
Yes, ma?
Cost of
Cost of
material.
material consumed.
Very good. Cost of material consumed. Who is that? Is it Hemant?
Vivek, ma'am.
Vivek. Very good, Vivek. Tell me cost of material consumed. What we are going to do?
Yes, ma'am.
Cost of material consumed. How do you calculate?
Opening stock plus purchases minus the closing stock.
Very good. Opening stock plus purchases minus closing stock. Now here in our problem where you have purchase returns. So from purchases where we have to deduct the purchase returns and minus closing stock where you get the cost of material consumed. Everyone followed? Opening stock plus purchases minus purchase returns minus closing stock is your cost of material consumed. So first point over. Second one is what?
Purchases of fixed.
Finished goods.
Yes, purchase of finished goods is the second one. Next one is what?
Change in inventory.
Very good. Change in inventory, work in progress and finished goods. The next?
Employment benefit expenses.
Yes, employee benefit, not employment, employee benefit expenses. Next?
Ma'am, progress
Finance
and
cost.
stock in trade.
Someone is asking something. Vivek, what ma?
After that, progress and stock in trade, ma'am.
Stock in trade. Okay, actually in stock where you have raw material, work in progress and finished goods. Change in inventories of work in progress and finished goods. In that only it comes ma. If all this is not given, directly we'll take stock. Okay. Next. Finance cost. After finance cost.
Depreciation and amortization cost.
Very good. Depreciation and amortization expenses. Then
Other expenses.
other expenses. Very good. So where you get the total expenses. Total expenses is nothing but B bit. Total expenses is nothing but B bit. A minus B is profit before tax. PBT. Profit before tax. A minus B. A is what? A is your total income. B is your total expenses. A minus B is equal to profit before tax. From that, where you're going to deduct the tax, where you get profit after tax. So this profit after tax, where do you transfer? This P&L account balance, usually we transfer whatever net profit we get, we transfer to balance sheet, isn't it? So this profit after tax to be transferred to balance sheet under the heading? Under the heading, Sony?
Reserves and surplus.
Very good. Under reserves and surplus. So whatever profit we are getting after preparing statement of profit and loss, it to be transferred to balance sheet under the heading reserves and surplus. And whatever adjustments given regarding dividends or interior dividends or proposed dividends, everything will be deducted in the balance sheet under the heading reserves and surplus. Reserves and surplus where we take profit after tax. From profit after tax where you have to deduct the adjustments. Is it clear? Now the next, so profit and loss account is clear for you all. So shall we start do first P&L account? statement of profit and loss, then we'll do the balance sheet, then we'll discuss the balance sheet. Okay,
Yes, ma'am.
now you see. So notes to account, first we'll prepare what? For the profit and loss. So revenue from operations, we are not having much adjustments, only he had given sales. So directly shall we take sales here itself without notes to account? Tell me.
Yes, ma'am.
Okay. Same, huh? Notes to account. No, sorry. No. So what is your revenue from operations? Sales is how much?
1,85,000.
1,85,000. Then next is after sales. Now next to what we have? Other income. Other income, are we having money points? No, only income from investments where we have. So directly we'll take. I think you get confused. We'll do one thing. We'll go in the sequence only so that you'll not find difficult. Prepare notes to account. Account. Tell me, ma'am, what all we have to prepare in PNL? Number one, I'll put the format. Insert table, 2 columns enough, I think, no? Now we'll see the problem and find out how many notes to account we have to prepare. Cost of material consumed. Yes. This side though we are not preparing anything. Is it clear for you all? In the income side, we are not preparing anything directly where we are posting revenue from operations and other income, only one account we have. So directly we are going to take. And when it comes to the expenses side, cost of material consumed 1, then employee benefit expenses 2, then comes finance cost, depreciation and provision 2. Yes, depreciation and amortization 4, other expenses 5. So we'll prepare this. Cost of material consumed. Cost of so take down cost of material consumed, the first one, then comes second one. Second is what, ma? After cost of material consumed, we'll go with employee benefit expenses. Change in inventory is not there. So we'll go with employee benefit expenses. Employee benefit expenses. Then next comes after employee benefit expenses. Next one is what, ma? Finance cost. Finance cost. after finance cost, depreciation and amortization, then comes fifth one, other expenses. That's all, isn't it? Other expenses. Is it clear for you, Alma? Because for all this way we are supposed to calculate. So we had taken on the income side, we had not taken because only one account where you have. So we are not showing under notes to account. But from here onwards, cost of material consumed, then employee benefit expenses, inventory also, work in progress, finished goods is not given. So we are not doing. Clear? Then employee benefit expenses, finance cost, depreciation and amortization, and other expenses. For this way, we are preparing notes to accounts. Anyone having any doubt, please tell me. Am I going fast? Am I going fast?
No, ma'am.
You're able to understand, isn't it? Drishya, any doubts you have? Drishya, is she there in the class?
Yes, ma'am.
Are you following?
Yes, ma'am.
Okay. Am I going fast?
No, ma'am.
Are you ready with the format? Now shall we start the problem? Notes to account. Total I asked you all to prepare for cost of material consumed, employee benefit expenses, finance cost, depreciation and amortization expenses, and other expenses. Total for 5 heads where you are going to prepare notes to account. Now shall we go to the problem? Are you ready with the format?
Yes, ma'am.
Okay. Then now opening stock of raw material 35,000 where you're going to take under cost of material consumed. Cost of material consumed, opening stock. Opening stock, how much? 35,000. Opening stock 35,000. Purchases. Add purchases. Purchases how much, ma? Purchases 62,400. Purchases 62,400. 62,400 less purchase returns, where you have purchase returns, isn't it? Less purchase returns given on the credit side.
2125.
2125. Return outwards is nothing but purchase returns. 2,125. 2,125. Tell me the final figure, ma. 62,400 minus 2,125. How much?
60,000 275.
275. Okay. Then comes total comes to here how much? 35,000 plus 60,000, 275.
90,000,
95,000.
95,000
275.
75. Okay. Less less closing stock. Less closing stock. Closing stock is how much given in the adjustments? Tell me. Closing stock is how much? Closing stock is how much?
40,000.
40,000. Closing stock is 40,000. So what is your final figure? Cost of material consumed is equal to
55,275.
55,275.
consumed. How much? 55, yeah?
Yes, ma'am. 55,275.
275. Okay. Now I think it is clear for you all. Followed? So notes to account, cost of material consumed is the first one. Opening stock plus purchases. From purchases, whereas you have purchase returns, it to be deducted. So where we had taken net purchases, opening stock plus net purchases minus closing stock is equal to cost of material consumed. I repeat once again, opening stock plus net purchases. How do you get net purchases? Purchases minus purchase returns is your net purchases. Opening stock plus net purchases minus closing stock is your cost of material consumed. Finished, everyone? Simultaneously you are doing, isn't it? Tejaswini, are you doing or not? Tejaswini?
I'm doing.
Yes, yes. Then next is, so we completed opening stock is over, purchase of raw materials is over, wages. Wages comes where under employee benefit expenses. Amount is 55,200. So wages under employee benefit expenses, wages 55,200. No ma? 55,200 wages. Any outstanding, any adjustments he had given? No adjustments. Okay, only we have adjustments regarding dividends, transfer to general reserve, provision for doubtful debts and depreciation is there. That's it. Okay, so wages over, buildings will not come to statement of profit. Carriage comes under which head? Carriage comes under other expenses, 3,770. So carriage where you're going to take under other expenses, carriage, other expenses. What is the amount?
770.
3,070 or 75?
770. 3,770.
3,770 is your carriage. Then the next is sundry data will not come in the statement of profit. Plant and machinery will not come under statement of profit. Current investments will not come under statement of profit. Advertisement where we are going to take under other expenses 3,000. So under other expenses, advertisement okay, advertisement 3,000 under other expenses. The next what we have bad debts. Bad debts 1,030 under other expenses. So bad debts how much ma'am? 1,030, am I correct?
Yes, ma'am.
Bad debts 1,030 under other expenses. Then comes debenture interest for half year. So debenture interest on debentures comes under finance cost 1,250. Take to the inner column under finance cost, interest on debentures. You can write for 6 months. How much he had given, ma? Interest on debentures? How much he had given? 6 months. 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 6 mon it 1,250? I don't remember. So interest on debentures, yes, 1,250. So 10% debentures at the rate of 25,000. Total, how much you are going to pay? Interest on debentures, just a calculation I'm showing. Interest on debentures at the rate of 10% on 10% only, isn't it? Debentures, how much? 10% debentures, 25,000. 25,000. So how much you'll be getting? How much you'll be getting? 10% at the rate of 25 on 25,000 at the rate of 10%, which comes to 2,500 is the interest on debentures we have to pay. Is it clear for you all? What is the interest on debentures you have to pay? 2,500. How you got it? 25,000 are the debentures. On 25,000, 10% is the rate of interest. So 25,000 into 10%, which comes to 2,500 is the interest on debentures. In 2,500, already we paid 1,250. So outstanding interest on debentures. Outstanding interest on debentures will be how much? 2,500 minus 1,250 comes to how much? 1,250. So total comes to 1,250 plus 1,250, 2,500 is your interest on debentures. Is it clear for you all?
Yes, ma'am.
I am showing this on 25,000 at the rate of 10%. We have to show 2,500 interest on debentures. It is only a hint. So in 2,500, 1,250 already given in the trial balance. We already paid. Given in trial balance means this is the amount we paid. But what is the amount you have to pay? 2,500. So still outstanding is how much? 1,250. So total interest on debentures 2,500 to be shown to the outer column. Is it clear? Then the next is after interest on debentures, furniture comes in the balance sheet. General expenses comes under other expenses, 3,775. So general expenses under other expenses. General expenses, 3,775. Am I correct, ma'am? Please
Yes,
tell me
ma'am.
if I'm writing any amount wrong. Because in scrolling, I may make mistake. So general expenses, then salaries 10,000. Even this comes under employee benefit expenses. So salaries 10,000. Salaries 10,000. Then next comes insurance. Insurance is 1,000. So insurance 1,000 comes under other expenses. 1,000. Okay. Then cash in hand comes under balance sheet. Cash and cash equivalent in the balance sheet. Then share capital comes in the balance sheet. Debentures comes in the balance sheet. Sales we had taken under revenue from operations. Creditors comes in the balance sheet under trade payable. Bank overdraft in balance sheet. Current liabilities, short-term borrowings. Income from investments already we had taken under other income. Return outwards is already deducted from purchases. So any doubts you have in the trial balance? Any doubts you have in the trial balance? Is it clear for you all? Now next come to the adjustments. Closing stock already we had taken to the cost of material consumed, we added. The next effect will be shown in the balance sheet. Depreciation. Now we have to calculate depreciation on plant and machinery and furniture by 10% and 15%. So plant and machinery is how much? 30,000. So on 30,000, 10% comes to how much?
3,000.
Yes. Depreciation on plant and machinery. Depreciation on plant and machinery. 3,000 ma?
Yes, ma'am.
Okay. 3,000. And depreciation on furniture. Depreciation on furniture. Depreciation on furniture at the rate of 15%. So your furniture is how much? 15% he had given. 15%. So furniture is how much? 6,000. On
900.
900. Okay. On 6,900 comes to, I'm sorry, 6,000, 15% comes to 900. Okay. Over. The other effect we deduct from the assets under the heading tangible assets. Now, next is, so first point over, second point over. Third point is what? Make a provision for doubtful debts at 5%. Make a provision for doubtful debts at 5%. So this to be calculated on sundry debtors. So what are your sundry debtors? 25,000. Sundry debtors are 25,000. It comes under other expenses. Provision for bad and doubtful debts.
1,250.
1,250.
At the rate 5% minus
Yes, ma'am.
Yes, ma'am. 1,250.
1,250. Okay. The next effect we deduct it from sundry debtors. Only we will be able to do. So even this is over. Provision for tax. If it is after calculating profit only, we are going to take dividends. We are going to take in the balance sheet. Transfer to general reserve, we take show in the balance sheet effect. Corporate dividend tax effect also we are going to show in the balance sheet. So I think we completed everything. Now what we'll do is we'll just total everything. First point is over. Second point is employee benefit expenses total is how much?
65 to 100.
55 to 100.
5,200. 5,200. Employee benefit expenses. I think we can cut this too. Then finance cost. Finance cost. Total. Total 2,500. Then depreciation and amortization. Total
3,900.
3,900. Then other expenses total. $13,000 change you'll be getting. How much you're getting?
13,825.
How much, ma'am? I can't hear you, ma.
13,825.
13,825. Okay, so we completed everything. Now we'll take this totals in the profit and statement of profit and loss. Okay, so revenue from operations, other income already we had taken. This total you tell me? 1,87,300. Correct? Then cost of material consumed is 1.
Ma'am, I think other expenses total is wrong.
Total is wrong, huh?
Yes, ma'am, it's right, sorry.
Correct?
Insurance I don't wrote, ma'am. I didn't write.
Okay, okay. So now you tell me all the amounts, ma. Cost of material consumed, how much? Cost of material consumed.
55,275.
55,000?
275.
75. Then this we don't have, isn't it? Change in inventory we don't have. Then employee benefit expenses, number 2. Tell me the amount.
65,200.
65,200. Finance cost,
2,500.
1,500. Depreciation and amortization,
3,900.
3,900. Other expenses,
13,825.
total
1,40,700, ma'am.
1 lakh.
40,700.
Everyone got the same amounts? Please check. Correct it is? Tejaswini, is it correct? A minus B is how much?
46,600.
46,600. Profit before tax. Tax rate is not given, but he had given the amount. Provision for taxation is how much? 5,800. So provision for taxation 5,800 to be deducted. So what is your profit after tax?
4,800.
Huh?
40,800, ma'am.
40,000.
Yes, ma'am. 40,800.
800. Okay. 40,800 is profit after tax. So this profit after tax, where do you take? We take under reserves and surplus. Is it clear? So here, now everyone completed? Just 2 minutes I'll give. Then we start doing the balance sheet. So notes to account, we completed up to 5. Now in shareholders funds, share capital, we have to prepare. Reserves and surplus, we have to prepare. Then under non-current liabilities, long-term borrowings, we have to prepare. Then long-term provisions are not there. Then under current liabilities, short-term borrowings. Are we having bank overdraft?
Yes, ma'am.
Okay, short-term borrowings, trade payables, other current liabilities, short-term provisions. Other current liabilities, are we having any expenses given? No, so not necessary. So these are the accounts you have to prepare. So just to tell me, ma, after 5, 6. 6 is what? Share capital. Share capital, 6. Okay. Under that, we'll take this. Copy, paste. Why it's coming like this? Share capital. Then I'll take the same thing. Copy. On reserves and surplus. Then after reserves and surplus, next it was what, ma? Reserves and surplus. Everyone put the columns, rows and columns. I think it is enough. Now one you tell me, ma, what all are there? Share capital. Then 7 is reserves and surplus. 8 is long-term borrowings. Long-term borrowings. After long-term borrowings, what do we have? Long-term borrowings, all this we are not having. Then short-term borrowings, trade payables, short-term provisions. Short-term borrowings, because we have to go in the sequence. The other day when you had written the test, 1 or 2 students, not everyone, they had not prepared notes to account in sequence. So after long-term borrowings, what I told? After long-term borrowings, we have short-term borrowings. We have, isn't it? Bank overdraft is there, isn't it? Check the problem once. I remember. It is there or not, ma? Short-term borrowings. Bank overdraft is there. Then comes trade payables. 9, 10. Trade P-A-Y-A-B-L-E-S. Trade payables. After trade payables, 11 is what is next, ma? Short-term provisions. Term provisions. Then we have 12 assets, the fixed assets, tangible assets, then you have 13. I think directly current assets, trade receivables, no? That's all. All this we are not having. Current investments directly we can take. Inventories we can take directly. Trade receivables, we'll take trade receivables, cash and cash equivalent. Trade receivables, 14 is cash and cash equivalent. Cash equivalent. I think we completed. Perfect, we have taken. Followed everyone? 6, 7 reserves and surplus. 8 is long-term borrowings. Then 9 is short-term borrowings, trade payables, short-term provisions, fixed assets, tangible assets, trade receivables, cash and cash equivalent. Okay. So total you have to prepare 14. From 6 to 14. Total 9 formats you have to prepare. Ready with the format? Now we'll go in the sequence. So see the problem. First we'll take the credit side. Credit side you have share capital 1000 shares of rupees 100 each. So it comes under share capital. Under share capital. Which share capital it is? Equity share capital. Equity share capital. Why it's coming? Equity share capital. How many shares, ma? 1000 shares, no? 1000 equity shares at the rate of 1 lakh. Then comes 10% debentures 25,000. It comes under long-term borrowings. Under long-term borrowings, 10% debentures 25,000. Then comes sales over. Creditors comes under trade payables 18,000. So trade payables, that is sundry creditors. 18,000, am I correct? $18,000. Then next is bank overdraft 17,000 come under short-term borrowings. Short-term borrowings, bank overdraft. How much you had given? 17,000, no?
Yes, ma'am.
Then the next is income from investments return outwards. We had taken. Then comes 10% debentures, 2,500 interest is outstanding, which comes under other current liabilities. I think we do not have any other adjustment. So directly under other current liabilities, we'll take 2,500 notes to account. Okay. Other current liabilities. Other current liabilities, no number. How much, ma? 1,250, no? current liabilities, interest on debentures outstanding. Is it clear? For your reference only, I'm giving. Hmm? 1,250. Okay. So we completed the credit side. Now come to the debit side. Opening stock over, purchases over, wages over. Buildings comes under tangible assets, 86,000. So buildings, tangible asset, no depreciation, directly take it to the outer column. Buildings, $86,000, no? $86,000. Then comes buildings. After buildings, buildings over, carriage over, sundry debtors comes under trade receivables, 25,000. So trade receivables, sundry debtors, how much ma? 25,000
Yes, ma'am.
less reserve for abandoned doubtful debts to be deducted from here, isn't it? Less provision for doubtful debts. How much? 1,250. To the outer column, we take 750 for 23,000. Correct it is? 23,750?
Yes, ma'am.
Yes. Next. Problem, no? So we completed sundry debtors. Plant and machinery comes under tangible assets. Plant and machinery comes under tangible asset, 30,000. So under tangible asset, plant and machinery, in a column, 30,000 less depreciation, less depreciation. How much? 3,000, I think, no?
Yes, ma'am.
3,000. Outer column, 27,000. Then the next is after plant and machinery, we have after plant and machinery, current investments. Current investments comes under current assets, 23,000. Directly we'll take to the format. Current investments. How much, ma? Current investments? No number. Tell me. Current investments amount is how much? 23,000. So current investments 23,000. Current investments 23,000. Then comes after current investments, advertisement over, bad debts over, interest on debentures outstanding we already had taken, furniture 6,000, tangible assets, under tangible assets, furniture inner column 6,000 less depreciation less depreciation depreciation 900, no?
Yes, ma'am.
900 to the outer column, it will be 5,100. Yeah. Then comes the depreciation, furniture over. General expenses, salaries, insurance already we had taken. Cash in hand comes under cash and cash equivalent 3,000. So cash and cash equivalent, cash in hand 3,000, cash in hand 3,000, in hand 3,000. Okay. We completed, I think. Problem over. Closing stock comes under inventories 40,000. No number. Directly we'll take inventories 40,000. Just check whether it's correct or not. Okay. Then comes closing stock over. Depreciation already deducted from the assets. Provision for doubtful debts already deducted from sundry debtors. Provision for taxation comes under short-term provisions. So under short-term provisions, provision for taxation, provision for taxation 5,800. 1,800 provision for taxation. Okay. Provision for taxation 5,800. Any doubts? One we had deducted in the statement of profit. The other one we are taken under short-term provisions. Then comes, so this is also over. Directors declare dividend at the rate of 15%. So in your working notes, we have to calculate dividends how much on it to be calculated on the paid up capital. Your paid up capital is how much? 1 lakh. So dividends will be, now what we are going to do is, your profit after tax is how much? 40,800, where you are going to take under reserves and surplus. Profit after tax. Profit after tax. Profit after tax. Okay. How much we got now? 40 profit after tax is how much?
40,800.
40,800 is profit after tax. Now what we have to do? First point is dividends are there. Then he's asking you to transfer 10,000 to general reserve and corporate dividend tax. So all this will be deducted from your profits. So less proposed dividend. This will take to the inner column because we have many adjustments to be done to profit after tax. Will take to the inner column. Proposed dividends. Proposed dividends always have to be calculated on the paid up capital. Your paid up capital is 1 lakh into, what is the percentage given now?
15.
15. Rate of dividend given how much? 15, correct. 15 by 100. How much? 50,000, I think 15,000. So any amount shown in the brackets means it to be deducted. The next is, so next adjustment where we are supposed to take this dividends under short-term provisions, 15,000 under short-term provisions, proposed dividends. 15,000. Proposed dividends 15,000. Okay. Any doubt you have in this? I think it's clear for you all. Dividends given in the adjustments, proposed dividends, this to be calculated on the paid up capital at the rate of 15%. What is the adjustment we are supposed to do? Deducted from profit after tax. That is, we calculated under reserves and surplus. From statement of profit, whatever profit after tax is there is transferred to reserves and surplus. I repeat, after preparing statement of profit, whatever profit after tax is there is transferred to reserves and surplus. Then he had given proposed dividends at the rate of 15%. So dividends to be calculated on paid up capital. Your paid up capital is 1 lakh. Here he had given 1 lakh into 15 by 100 is 15,000 to be deducted from profit after tax. Next adjustment to be shown under short-term provisions, proposed dividends. So this adjustment, is it clear for you all? The next what he had given, transfer 10,000 to general reserve. So this adjustments will be done under reserves and surplus itself. So less transfer to general reserve. How much? 10,000. 10,000, even this to be deducted. Even this to be deducted. The next adjustment what we are going to do, it to be added to general reserve. So general, we are not having any general reserve in the problem. So directly general reserve you are going to take to the outer column 10,000. I repeat once again, please see here, transfer to general reserve here given. So this transfer from where you are going to transfer from the profits. So one effect is where we are going to deduct it from profits. Here, the next adjustment, it to be added to general reserve. As in our problem, we don't have any general reserve balance. So directly under general reserve head, we are taking 10,000 to the outer column. Is it clear? Then the next one, next adjustment is what? Corporate dividend tax. 15%, 12%, 3%, ignore grossing up of dividends. So first we have to calculate corporate dividend tax. After all your adjustments, working notes, calculation of corporate dividend tax, corporate dividend tax. Here, now first what we are going to do, basic rate at the rate of 15%. So what are your dividends you are paying? 15,000, I think, isn't it? On 15,000 into 15 divided by 100 comes to how much? Tell me. 15,000 15,000 into 15%. 2,250. 2,250. And the next is surcharge. Surcharge at the rate of 12% he had given, Noma.
Yes, ma'am.
Yes. On 2,250, on this, whatever dividend you got on basic rate, on that you are supposed to calculate into 12 divided by 100 is equal to, tell me the amount.
270.
270. Then education cess. Education cess at the rate of 3%. At the rate of 3%. Tell me, 2,250 plus. Hello? Hello, yes, ma'am. Good, ma'am. I'm fine, ma'am. I didn't get you. Oh, okay, okay, ma'am. If you don't mind, I'm in the class. You can give a call later. Okay. Sorry. Okay. So education says at the rate of 3%. So total comes to how much? 2,250 plus 270 comes to 2,520. 2,520 into 3 divided by 100. So how much you are getting?
75.6.
We'll take it as 76. Okay. Corporate dividend tax is equal to, tell me total, ma. 2,000. Am I correct?
Yes, ma'am, correct.
Okay. 2,596. Now this corporate dividend tax is followed, everyone. Calculation of corporate dividend tax. First we calculated basic rate, that is taking the dividends into consideration, 15%. Whatever tax you are getting, on that you are supposed to calculate 12%. Again 2,250 plus 270, on that total 3% you have to calculate. So this will be your corporate dividend tax. So what are the adjustments we are supposed to do? One is deducted from the profit after tax. So less CBT. How much you are getting? 2,596. 2,596 to be deducted. Now tell me profit after tax after deducting all these amounts, how much you are getting? From 40,800, you have to deduct 15,000, deduct 10,000, deduct 2,596. So 15, 25, 25,
13,204.
13,204.
13,000.
204.
Correct, it is okay. One effect we deducted from profit after tax, the other one we have to take under short-term provisions. 2,596. Now what we are going to do? Now we'll add all the total 1 lakh. Okay, 1 lakh. Wow. Then next you tell me the total here.
23,204.
23,204. Hello. Good morning, Shanti. Uh-huh. Acha, acha. No faculty will go, I think. Next star it is for Sweta. Hmm. Mm-hmm. Mm-hmm. Okay, okay. Shanti, now I'm in class, Shanti. Huh? Oh, okay. 25,000. Then comes short-term borrowing, 17,000. Delete this later. How much time it is taking? Then sundry creditors, 18,000. Now all these amounts you have to tell me. Short-term provisions, how much?
23,396.
23,396. This one, fixed assets. 100. Much?
One lakh 18,100.
Yes, 1,18,100. Then trade receivables will be the same, 23,750. Then cash and cash equivalent 3,000. Completed. Any doubts you have?
Ma'am, 9th and 10th account.
What, ma?
9th and 10th account once.
Yes, yes. Number 9 and number 10 you are asking, no?
Yes, ma'am.
10th one. And this is only one you have.
Yes, ma'am.
Okay. Finished everyone? Now you tell me the totals. Share capital. 1 second. Share capital number 6. Tell me amount. 1 lakh. Reserves and surplus 7. Tell me the amount, ma. Reserves and surplus how much?
23,204.
23,204. Then money received we are not having. No number. Share application we don't have. Then long-term borrowings. We prepared the account
25,000.
25,000. And deferred tax no. Other non-current liability no. Then long-term provisions no. Then short-term borrowings we have. What is the number? 9.
9, ma'am.
9. Total?
17,000.
17,000. Trade payables also we have 10.
18,000.
10,000. Then it is directly we have taken short-term provisions 11.
23,396.
Okay, 1 second. 23,396. Total how much you tell me? Okay, we'll do later. Fixed assets, tangible assets 12. Amount is
1,18,100.
100. Intangible assets we don't have. Capital work in progress no. Intangible assets under development no. Non-current investments no. Then deferred tax no. Then long-term loans and advances no. Other non-current assets no. Current investments already we have taken. Trade receivables number is 13.
13.
13 amount
23,750.
750. 23,750. Then cash and cash equivalent 14.
3,000.
Short-term loans and advances nil. Other current assets also nil, no? Tell me the totals. How much you got? 2,07,850. Liabilities side, I got this amount. 2,07,850. Check here also. 2,07,850. Thank God I got it. 2,07,000. What the totals? 2,07,850. Ma. One problem, two periods. Anyone having any doubt? Everyone completed, ma?